Yo, it's your boy Felix, and welcome back to another interesting episode on 12 of FX. And today I'll be analyzing the Apple stock. But before I jump right into the topic of today, I want to thank you guys for giving my first 1K view on my previous video. In case you haven't watched the video, it's a technical analysis on Tesla stock. So I'll be posting the link below. So click on it and you'll get a very rich information about this Tesla asset. So without further ado, let's jump right into the topic of the day. The first thing I always do whenever I'm giving the market is to go to the highest time frame. So in this case, you have anything from the daily time frame to the monthly time frame are all considered higher time frame. So you using it is a bit subjective, but always go to the highest time frame. One reason why I go to the highest time frame is because this is where smart money traders like the banks and big financial institutions, this is where they pay attention to. And secondly, the higher time frame give you the overall picture or the overall direction of the market. So what's the market doing? There are three phases you can find the market. Either the market is making higher highs, higher lows, or the market is making lower lows, lower highs, or the market is moving within a range. So in this case, what I can say right now is that the market has been making higher highs and higher lows. This was a high, a low, a higher low. This broke the structure, a higher low, a break of structure, a high, a low, a high, low, high, low. So high and low. So the market is making higher highs, higher lows. So it's in an uptrend. After we have established the direction of this trend, the next thing to do is to get the fractals of this trend. So in an uptrend unfolds in the 5-wave pattern. So this is the first wave, second wave, third, fourth, and fifth. So this is an uptrend because why is it an uptrend? Making higher highs and higher lows, which is what we have down here. So next thing to do is to get the fractals of the market. What I mean fractals is like you have a smaller 5-wave pattern within the impulsive wave. So these are the fractals. And fractals. The impulsive wave always a 5-wave pattern, and the corrective wave are 3-wave patterns. This is the 5-wave pattern, and within the 5-wave pattern you have fractals. These smaller waves are called fractals. So you can do that by going down to the lower time frame. So in this case, I could see that the market made the first move, which is the first wave, and got to this highest point down there before a massive retracement. You can see that you had minor retracement, and this was a massive pullback. So I know the first wave ended at this area, and this was the second wave. So this is the first wave, the second wave. So this is the first wave, second wave, and what comes after second wave is the third wave pattern, the fourth, and the fifth. So this is the direction we've established. An uptrend is making higher highs and higher lows. The second thing to do is to zoom in and get the fractals of the market. So I'll first start by getting the fractals of the first wave. We've established that this is the first wave. Put it in a black color. So this is the first wave, and the fractals of the first wave has to have like a 5-wave within it. So if I zoom into this area down here, get my trend channel. So there's the first wave, second, the third, the fourth, and the fifth wave. So there's the fractals. As you can see, guys, this is the first wave, impulsive wave. There's 1, 2, 3, 4, 5. So I'm trying to get this on this first wave. So this is the first wave. This is the first wave down here. Then get my drawing tool. This 1, 2, 3, 4, 5. In a green color. Is green. So you have the first wave, the second wave, and what comes next is the third wave, which is this. there's a third wave, and the third wave is an impulsive wave, which is what to expect a 5-wave pattern of the third wave. So at the end of the 5-wave pattern, what will come is a fourth wave, but that will come at the end of this third wave. So I'm going to zoom in and get the fractals of this third wave. So get my zoom into what I could see. This is, if I use my trend channel, this is the first, second, third, fourth, fifth. But to be shown on my calculation, I have to go down to the scale down to the lower time frame. In this case, I'm on the 3-month time frame, so I'll go down to the monthly time frame to get a clearer picture, to get more candlestick pattern out, so I can know what the candle is doing at that point in time. So right now we've established this, the first wave, the second, we're currently on the third wave. So the third wave is the 5-wave pattern. There's the first wave, second wave, third, fourth, and fifth wave. So I'm going to change the color of this to red. Put just red. Put this as red as well. So you can see this is the third wave. The third wave is the 5-wave pattern. This is the first wave, second, third, fourth, and fifth. But in this case, I could see that we'll have an elongated 5-wave, fifth wave, because this is also a 5-wave pattern. Because within this wave, the wave 1, wave 3, and wave 5 are always impulsive wave. So since they're impulsive wave, you have to expect a 5-wave pattern. So what to expect a 5-wave pattern down here, and at the end of this 5-wave pattern, that will complete the third wave, this bigger third wave, and what comes next will be an ABC wave, or an ABC corrective pattern, which is going to be this. It's going to come next after this. So right now, but before this corrective fourth wave happens, this has to be completed. What to expect a 5-wave pattern. Already I could see this is the first, second, third, fourth, and fifth. So what to expect the market getting a form of support around this area, because this is meant to be a 5-wave pattern. So this is going to be 1, 2, 3, 4, 5. Zoom in. And I change the color to, let's say, blue color. And I scale down to a lower time frame, to the weekly time frame. So this is the first wave. This was the first wave, the second wave, the third, fourth, and fifth. Guys, notice the fractals of the third wave. This is the 5-wave. 1, 2, 3, 4, 5. And what comes next is the fourth wave. But before the fifth wave happens, this has to be completed. And this fourth wave is an ABC pattern, meaning it's a 3-wave pattern, where this is A, B, C. So what gets that is a fourth wave, which is an A, B, C pattern. So what I expect a form of support around this area. And also, guys, around this region, this was where the bank bought aggressively. There was an aggressive buy at this region down here. You can see that this led to the break of this structure, and you can see this massive move. And before the banks took this trade, they first of all sell the market before buying. So even though they were at profits here, they had an open sell position that was run at a loss. And secondly, the banks had their stop loss around this area, so that resulted to this area being an area of liquidity in the market. So there's a lot of money resting down here. So what happens is that the banks, after this massive bullish move, they will have to manipulate the market towards closing their open position. And also, this is an area of liquidity. It always drives price towards it. So what to expect is this candlestick going downwards and a massive move upward. So you have a candlestick. So you have a candlestick that will break this structure a little bit, this structure down here, and then what comes next is be a 5-wave pattern, which is the next bullish massive 5th wave. But I have to scale down to the lower time frame to zoom in to see the fractals of this C wave. This wave is meant to be a 5-wave pattern. It's meant to be a 5-wave pattern because it's an impulsive wave in a bearish trend. So if I go down to the daily time frame, this is the first wave, second wave, third wave, fourth wave, and the 5th wave. This 5th wave, I'd also expect a 5-wave pattern down here. Get my trend channel. This down here. So this. First wave, second wave, third, fourth, 5th. So instead of trying to count the fractals within this lower time frame, you can say, okay, on the break of this structure, this 4th wave, this was the last major high. Because if you see what you see that if you look at the fractals of this B wave, this C wave, you have lower low, lower high. So this is the first wave, second wave, third wave, fourth wave, and 5th. So the highs were always protected by banks. So banks always protected the highs because you have a lot of money resting on this area down here. So it never got broken. So instead, if you have a break of this structure down here, that's a good time to buy because you have a lot of money resting on this area due to banks having their stop loss. So banks will never lose the money. So you have a lot of money resting around this area. So you have to wait for the market to break this structure, or if you can't wait for that, you can zoom into the lower time frame like what I did and wait on the break of this 4th wave, which hasn't developed yet. So right now I should be anticipating towards taking a buy trade here, but before taking a buy trade, you have to get enough confirmation, and one of the confirmations is like it's a break of structure. So the break of this structure or the break of this structure, because you have a lot of money resting down there, so the market will go upward and break the structure. So but that will happen after this 4th and 5th wave has fully developed, so you have to wait for a bit. So but when that happens, what will your profit target be? Your profit target will be at going up to the high time frame, since we're investing. Go to the weekly. This will be a profit target down here. Your first target will be at this level, which is at 182.76. Summary of my analysis: this is the first wave, second wave, third wave, fourth wave, and 5th wave, and we are still on the 3rd wave. And within this 3rd wave, you have a 5-wave pattern, which is an impulsive wave, where this is the first, second, third, fourth, and 5th. The impulsive wave always 5-wave pattern. This is the 5-wave pattern, a 5-wave pattern, and a 5-wave pattern. So in that case, what to expect a fully developed 5-wave pattern before getting this 4th wave. And already the market is close to this area of demand. This is the first wave. So the last fractals of this 5th wave, this is the first wave, this is the first wave, second wave, third wave, fourth wave, and 5th wave. And we established that the market will gain a form of support around this area of demand, because at this area the banks were aggressive at this area, and it will also never get broken because this area was protected by the bank. So the market will just come down here and close the open sell position down there, because before the bank took this buy trade, they sold before buying. So you have an open sell position at loss, even though they were at profit at around this area. So the market will have to come down, reside, go down a little bit, gain a form of support down here with some candlestick that closes below this, and take out the money resting around this area and around this area of liquidity, and head upward for this external liquidity down here, because around this area, around the ends, you have money resting on top of this area. because a lot at this end, the markets, the banks, they short heavily down here, so their stop loss is also resting down here. So this is an area of liquidity, and also you have retail traders that are planning on buying this market. So they think whenever a market breaks an area of resistance, it's time for them to buy. So what happens is that you have a lot of money resting down there because you have people that have buy stop that intend on buying this market on the break of this structure. So the market will go up here. The first profit target will be at this level. Take the money resting down there, go down a little bit, and continue upwards, probably around this ends down here. But the first profit target should be at this level because of the area of liquidity, the money resting around this area due to the actions of banks and retail traders. So that is it for today, guys. If you like what you watch, don't forget to like, comment, and subscribe, and see you guys on my next video. Thank you.